Welcome back to Investing Talk Podcast. Today, we're zeroing in on Upstart Holdings. You sent over quite a bit of material, recent news, a detailed due diligence report, quite the stack. Our mission here is really to unpack what's most important in all this and understand the story behind those headlines for you.
That's right. We've got the Q1 2025 earnings results, news about a pretty significant forward flow agreement they signed, some new partnerships too, and then, of course, how the market took it all. And we'll also look a bit deeper, at their financials, the business model itself, and maybe what the future holds. It's definitely a lot to cover, but we'll pull out the key pieces to give you a clearer picture. Okay, let's get into it.
Let's do it.
Yeah.
So first off, recent performance highlights. Upstart seems to have had some, well, pretty significant growth in Q1 2025.
Oh, absolutely. Loan originations hit $2.1 billion. That's up, get this, 89% compared to the same time last year. Revenue also jumped substantially, $213 million, which is a 67% increase year over year. And interestingly, their GAAP net loss was actually quite small, just $2 million, so near break even. Adjusted EBITDA came in at $43 million. What's really fascinating here, I think, is just the sheer scale of that growth they're achieving.
Right. Normally, you'd think growth like that would, push the stock price up, but the reports say the market reacted differently.
It really did. Even with what looked like a positive report, the stock price actually fell, dropped over 15% after hours, down to around $43.63. It seems that disconnect, the worry is around declining contribution margins and also their guidance for Q2. It's also worth noting the stock had actually climbed about 6% just a few days before this. So it really shows the volatility, doesn't it, and how much investor interest there is.
So even with good top-line news, there's this layer of uncertainty underneath. And analyst sentiment reflects that too, I gather.
That's right. Opinions seem pretty mixed. Some funds actually upgraded their rating after the price drop, which is interesting. So it raises the question, what are the key things driving this uncertainty? Especially with those strong growth numbers, it really looks like the market is focused hard on profitability, those margins. Are they sustainable?
That makes sense. Okay, beyond the earning figures themselves, there were a couple of other key developments. A fairly significant agreement.
Yes, exactly. On the same day as the earnings, Upstart announced a $1.2 billion forward flow agreement. This one's with Fortress Investment Group. Now, thinking bigger picture, this kind of deal usually gives a lending platform like Upstart a steady source of capital, lets them keep funding loans, but it might also signal something about how they're managing their balance sheet, maybe offloading some credit risk. We've seen other fintechs do that as they grow.
Okay. And they're also busy expanding their reach, signing up new partners.
Precisely. They've recently partnered with Leak Trust Credit Union and also First Commonwealth Federal Credit Union. The idea is to offer their AI-backed personal loans through these more traditional institutions. It's clearly about broadening distribution, getting their tech into the existing banking system.
Okay, let's maybe dig a bit into the core of Upstart. Their business model seems pretty key to the whole story.
Absolutely. So Upstart runs this AI-powered lending platform, right? It connects people looking for loans with, I think it's over 100 banks and credit unions now. Their main differentiator, the thing they talk about most, is using advanced machine learning. They argue it gives a much more accurate picture of credit risk than, say, just relying on traditional FICO scores.
And they're not just doing personal loans anymore, are they?
No, they've branched out, started with personal, but now they're into auto loans, even home equity lines of credit, AGLOCs, which kind of fits a broader trend you see in fintech companies trying to offer a wider suite of financial services.
So how does this AI approach to checking credit risk actually compare to the old ways? What makes it different and supposedly better?
Well, the information we have suggests their AI looks at a much wider range of data points. Things like, your education, your job history, maybe even how you interact with their platform, way beyond just the credit score. The theory is this lets them find creditworthy people who might get missed by older models, and it could also mean a better, more accurate pricing for the risk involved.
Got it. And in this space, you've got competitors like Lending Club, SoFi. What really sets Upstart apart? Is it purely that heavy focus on AI for underwriting?
Well, Lending Club and SoFi are definitely big players too, but Upstart's calling card, their main pitch, is really that deep integration of AI, specifically in the underwriting part. Their whole argument rests on their machine learning models being, well, better predictors of who's likely to pay back a loan.
Oh, okay. Let's shift over to their financial health again. The Q1 report had some interesting numbers there.
It did. The earnings per share, EPS, for Q1 2025 showed a big improvement, came in at $0.30. Compare that to a loss of 31 cents in the same quarter last year. So that definitely points to a positive trend in profitability, which, like we said, makes the market's reaction and those margin concerns even more intriguing.
And the adjusted EBITDA margin looked decent too.
Yeah, around 20%. That certainly suggests they're generating positive cash flow from operations. Now, the reports we saw didn't give specific figures for like debt to equity or free cash flow right now, but the overall picture seems to be strong top-line growth combined with improving operational efficiency.
So stepping back, looking at everything, what would you say are the main strengths that stand out for Upstart right now? And maybe the key red flags investors should be watching.
Okay, strengths. Definitely that rapid loan origination growth. That's hard to ignore. Diversifying their loan products is also a plus, and of course, their core AI technology is potentially a huge advantage. But then, red flags. Those declining contribution margins that spooked investors are number one. And the fact that GAAP profitability is still just near break-even. It tells you that while the growth is impressive, they haven't quite cracked consistent, significant profitability yet, at least by standard accounting. And that's, a major focus for the market.
What's the general vibe in the market then regarding Upstart's future?
Analyst sentiment, as we touched on, seems sort of cautiously optimistic. They see the growth potential, but they're definitely wary about that margin compression. Social media buzz kind of mirrors that. You see excitement about the tech, definitely, but also concerns about valuation, especially given the current profitability picture.
And looking ahead, what are the key things for investors to keep an eye on? Catalysts or risks?
Well, upcoming catalysts would include seeing how they progress with expanding into those other credit products. And obviously, the next quarterly earnings report will be huge. People will be looking closely to see if those margins stabilize or improve. As for risks, continued pressure on margins is the big one. Increased competition is always there in fintech. And potentially more regulatory scrutiny down the line regarding AI and lending practices. That's always a possibility.
And that analyst recommendation you mentioned.
The analysis we looked at landed on a hold, which really sums up that cautious wait-and-see attitude. Basically, let's see some proof of margin stability alongside the growth before getting more bullish.
Right. So for you listening, trying to make sense of a company like Upstart, what's the bottom line here?
It's a really interesting situation. You have this story of impressive, rapid growth driven by potentially disruptive AI technology and lending, but the market's reaction to the latest earnings just underscores how critical that balance is between growth and profitability. Those concerns about contribution margins, that's definitely the thing to watch closely in their next reports.
Yeah, it's a fascinating case study right now in the fintech world. Really shows both the massive potential and, frankly, the tough challenges of scaling up a tech-driven financial business so quickly.
And this leads to a good question for you to think about. When you look at a company like Upstart, how do you weigh that super fast growth against immediate profitability? What numbers, what metrics are you going to be watching most closely to judge their long-term prospects?
Something to consider. If this breakdown of Upstart's performance and future has got you thinking, please do subscribe, like this discussion, and maybe leave a comment with any other questions you have. We really appreciate you tuning in to Investing Talk Podcast.